Bitcoin is still in the range here. We can see it's not quite ready to move out. It's hit liquidity, it's bounced off, it's come down, and you can see in the last 24 hours, I talked about it a couple of days ago, as soon as that started to kind of break out, everyone started longing. And what it's done, it's come down and it's just taken that liquidity, taken it again. It's just not letting anyone up. And then it's just jumped right back up and taken that liquidity there. So right now, this market is just chewing up the longs and the shorts. Look at it in the last week. Taking that, come down, taking that, tapped up, taking some of that. But it's left it. This is what's interesting. It's come down, taken some there, bounced off, come back, taken some again, and now it's up here. So if we look at this in the week, this range here, it's just building liquidity above, and it's sweeping out the lows. And if we look on the monthly, there's still some at the top here, and that's starting to build up. That's starting to build up nice and healthy now. So what they like to do is, when they're in this range, they just keep on chopping everyone out. They keep on swinging it up and down and then just taking all the liquidity. And you can see in this smaller range here, this is where we're seeing this move playing out. So I talked about yesterday, you know, while it's down here, it might as well come and take this. What have we got? 124 million. But you can see there's 143 million all of a sudden just appeared as everyone was doing shorts. So all of a sudden it needs to travel all the way down here to get that, or it can travel up here to get that. And then it's closer to here. So still, I think the market's still undecided where it wants to go. You can see the volume dropping off here. You know, this is a wedge coming across, and it's starting to break down now. This isn't a good sign. It means any move upwards, it's not backed by anything. Greed, we're in fear as well. So we've got fear, got the volume dropping down, and we've got liquidity getting chopped up and around. Even here, there's a big long opened up there at 96.5. So the market's quite indecisive. I've gone on the 4 hour here, and you can see it's come down, it's broken out, it's come back and retested. And then you can see here, that is the low, and it's come down and flushed out, and actually wick filled the 50%. So that is now a confirmed wick fill, which is a good reversal sign. So we might move up here, but I think any move that goes up, because we have no volume back in it, I don't know, I just feel like it's going to roll over. I don't know how high it might get up, but if there's no volume back in it, it can't. It's like when you throw a ball and you just throw the ball gently, but if you throw the ball with a hard one, throwing it with volume, you know it's going to go further. But this is going on with, like, basically you're throwing the ball with a weak arm here. So it might get up to here, it might get up some point, but then I feel like it's going to roll over and maybe just come down and sweep that low. I don't know. I just feel like when you've got such a strong support there, and then you have a major support and they're joining together, it tends to draw price there. If it comes down there, we're getting a big bounce. I don't see this breaking down. That's the end of the bull market. That's the end of the bull market, and off it goes. I just don't see it happening. I think what we're going to do is we're going to go as far as this can get. And unless, you know, this volume might just start turning up. This might just be a straight off shotgun slingshot, starts moving, volume starts back and off it goes. But right now, with that volume dropping, I can't see this breaking out the range anyway. It might come up. Maybe it might come up, take this liquidity, and then roll over. You know, so that option might be something like, can it get itself up there, sweep that liquidity. In fact, let's just see exactly what levels they're at. 109, 109, 107. Yeah, so it'll maybe make its way up, take the 107, and that top there is 109, so just... And then from there, if there is no volume, if there's no volume changing back in this up, it can't break out the range. It's just gonna, you know, it'll be lucky to get up here without the volume there. That's the unfortunate truth now. So what it probably needs to do is come down. So the big money, you know, they've obviously wanting to buy. They don't want to buy up here. They're wanting the price to go down here. They've started making their, look, this is their buys. Buy there. They bought there, straight up. They bought there, straight up. They have to have multiple entries because their position size is so big. They can't just be like us, like retail, and just buy in. They have to create this range so they can get in, and they have to build up their position over time. So they've got one, they've got two, and do they really want to buy mid-range? And if we look at, this is an indicator, this is on the visible range volume profile. This is on the paid version of TradingView. So unfortunately, if you don't have it, you won't be able to get it. But I think there is one in the volume. I think there is one somewhere here. There's somewhere here. It's a free version of this. It's slightly different. But what this is you have your volume here, and it says each day this is the volume. So you can tell by each day which is the volume, which volume is bigger. That's good to tell you on the day, and you can kind of reflect it. But what this does, it turns it on its head and says, this is the volume at these price levels. So as you can see, the volume increases from 106, 106, and this is the biggest one at around about 96. And this white line, this is where the most volume is traded. This is called the point of control. And as you can see, this is probably why Bitcoin is stalling out around about here, because this is where all the volume's getting traded at this level here. So it's taken a lot of work to try and shift this around. But I do like this, and I use it quite a lot, so I just thought, you know, another piece of information for you guys watching. If you got the paid view, this is always very useful. Any bars that have a lot of volume on them, they tend to react very similar to support and resistance like these are here. So we'll see how the market does. Part of me just, I wanted to go up the now, but with the volume coming down, and I think for the overall better move, for this to have a flush down here and really just cleanse this range out and just say, you know, this will be the move where it's just like, right, we're done here. You know, we've just crushed everyone, and they've got their move up, and they've managed to build their position. So it just makes sense for it to come down here. If it will, it does. But it is technically on a breakout. It is holding support. It is bouncing back. So right now, this is the difference. So a lot of people will be like, okay, price is going to come down here. This is how I feel about it, so that's that. Whereas I'm like, this is where I feel like it's going to come down. But that is basically priority 2 in terms of my decision making. Priority 1 is, look at the charts. I might feel like it needs to come down here and do this big sweep and clear the range and then move up. But I don't bet on that, because look, right now it's a breakout, retest, and it's moving. So it might just move up like that. So this is why it's very important, and this is the psychology part of trading and investing. Obviously, it's the risk, reward, the strategy, and the psychology. That's the 3 parts. But if you can stop yourself from acting on your feelings, and then you basically recognize how you feel, but you put it to the side, and your main decision making is done off the charts, then you're going to be so much more successful. You're going to be better than 90% of the people out there if you can just segregate those 2. Because even though it doesn't matter what you feel, it doesn't matter how good you are or how long you've been trading for or how experienced you are, you still get these feelings from time to time where this is what I think it's going to do. But you don't act on them. You just let the charts tell the story. It's like when you're reading a book and, you're reading the book and you're like, oh, I think I know the ending of this. Aye, you think you know the ending of the book, but you need to read the book. You need to read the charts for you to find out the actual ending. Because you might think, oh, this is the ending, and you might be right. You might get it right. But if you're going to guess the ending of every book, the chances are you're going to be more wrong than you are right. And it's very similar to the charts. You've got to read the charts, and that's how you put probabilities in your side. So right now, I'm feeling like it needs to come down for a sweep down here, but long and strong. It's broken out, it's retested, and it's moving. So let's see how it does from here. So if you like that, guys, if you found that interesting, please like and subscribe. I'm going to do these every single day. I've pretty much promised you guys. I haven't stopped yet. I've put one out every single day, and I'm going to give you the daily update, and I'm going to get us out close to near the top so we can all enjoy this bull market together. It's been a long bull market, this one. It doesn't even feel like a bull market at times, does it? It's been tough on the old alts, but we'll keep going, guys. Check in every day. I'll keep you right. Thanks for listening, guys, and I'll see you again, same time tomorrow. Cheers.